Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, the 5th of July, 2023. Thanks for joining us today. It is episode number 2495. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Well, we've been off for a couple of days now. We had a half day on Monday, and we had a half day yesterday in the indices. The markets traded, but didn't really go anywhere this morning. Things are slightly falling off. Here's your convergent trading pre-market summary sheet. Quick reminder, by the way, for those of you who have been wanting to join convergent trading but have put it off, there's a pretty decent sale going on for the holidays here. I'll let this run through for 30 seconds. Basically, it's a quarterly membership, which includes the Trade Right program, includes a whole bunch of stuff, market stats reports, the chat room, the trade talks, all that stuff. The most important value here is that quarterly members get the Trade Right program. You want to be a part of that. So the link for that is go to ct.pro/summer 20, all lowercase. Go to ct.pro summer 20. Go check it out. Back to the sheet here. Remember, we have FOMC minutes today at 2 o'clock Eastern. The market is in a mild risk-off sentiment this morning. And overall, we are, pulling back from where we were on Friday, last Friday, the big rally. And so now we're kind of pulling back a little bit. We'll look at that a little bit in detail. Chinese Caixin services PMI lower than expected. China continues to put out numbers that show that it really is barreling towards a recession. China announces export restrictions for two metals widely used in semiconductors. This is in retaliation for the U.S. prohibiting NVIDIA and AMD last week from selling to Chinese companies, AI firms specifically. So this is kind of another trade war going on. Russia and Saudi Arabia announced plans Monday to keep cutting oil production this summer. Saudi Arabia, I guess, is really hopeful here. Despite all efforts to limit supply and push prices up in oil, it's not happening. The market's well supplied and prices reflect that. Teamsters say that UPS has walked away from contract negotiations. There's a potential strike by UPS. Meta unveils Threads app to rival Twitter. I believe that's on Instagram, something like that. And that's it. Now, it is the first day of the week this week. It's a short week, just 3 days. So I like to go through several things. I want to draw your attention to the harmonic rotations and how they've been adjusted over the last week. Mostly stable, but the NASDAQ continues to drop in its range and harmonic rotation. It moved down to 23 points. So what this means is on a 1 minute swing basis, the NASDAQ is expected, a normal move in the NASDAQ could be up to 23 points. Normal being one standard deviation off the mode. But also what I want to cover is the high tier releases coming. It's a short week this week, so I'll go into next week as well because next week is very important. But what we have today is we have the FOMC minutes, balance of trade this evening from Australia. Then next week we get the IV PMI from Canada. It's not such a big mover. But we get ISM Services PMI. This one's important. JOLTS job openings. It's important as well. These are tomorrow. At all three numbers at 10 o'clock. The Canadian and the US numbers at 10 o'clock tomorrow, so pay attention to that. Friday, we get non-farm payrolls and unemployment out of the US. In Canada, and then we have the inflation rate out of China on Sunday. China's doing a lot, as I've said. The PBOC is really trying to support the currency. So we'll see how that plays out on Sunday, because that's going to spill over into Monday's action. Then we don't have much on Monday. Tuesday we have the German ZOO, which is pretty big, the economic sentiment index, unemployment out of Great Britain. But Wednesday is when we have CPI, and it's really important because we do have an FOMC meeting at the end of this month, and then we skip August. So this is the last. This is one of the last kind of big releases for the Fed before it takes a break over August. So the Fed is indicating that it's probably going to raise rates at least 25 basis points in July. Then we don't get a meeting until September. So this is really, really important next Wednesday. The inflation number's been falling. The core, however, has not been falling the way they had hoped. The core is staying very, very sticky. And then on Thursday, we have PPI, which is that's the producer price index. That's another input into what the Fed has to do. So next week, some pretty big numbers. This week, we do have the unemployment number. The unemployment picture is such that it's very, very tight, which is inflationary. So it's, again, another big input. Crude has popped higher. It's trying to push towards 72. Other than that, everything else is off. Europe's off. Asia finished off. And that's that. So the S&P this morning, the auction condition is trending lower. We had a very clear sell structure this morning. We'll look at that. The volume is a little bit lighter than we would expect for the range that we have, 174,000 contracts. 62% of that occurred below the prior close. And then the point of control is at 44.68. So the point of control is really high still compared to where we were last week, where we seem to be accepting higher values. We still didn't get through the 4,500 because Friday went to 44.98. It took out the prior high, which was 93.5 or so. It pushed to 98 and fell right off. Every time we've come up to 4,500, we've come right off. So here's how things are looking this morning. Let's look at the S&P first. There it is. On this platform, we don't. I'm not able to wipe away the holidays. So you could see that Friday ended here, and then this is the overnight on Sunday. This is Monday's trade. This is Tuesday's part day trade, and then here we are Wednesday. And what we've done is we went and tested settlement on the open, and what we've done is we have impulsed down, pulled back, couldn't even get back to the mid or VWAP, so it's a pretty aggressive move down. And then we pushed right through for an additional impulse. And you can see the bubbles on there. Those bubbles are important because they're incorporating. It's a unique way of incorporating order flow on top of the chart here, so we can see where the interaction is. Bubbles are interesting in that they could mean both things. They could mean that there's an aggressive seller that is pushing through, but they could also, depending on the context, they could also indicate that there's a bid there that absorbed. So they could indicate absorption, but they could also indicate aggression. Generally, they're indicating aggression. So on the way down, we expect to see red bubbles, and then price flows through. And on the pullback, we expect to see blue bubbles as offers stay solid, and then the market comes and lifts those offers. But if price doesn't break through those bubbles, then you'll probably have a continuation, which is exactly what we had today. See these blue bubbles here on the pullback? It just means offers were there. Market lifted those offers with size. The bubbles only exist when there's 100 lot or better. This is using MBO data, so we're reassembling trades. You know, we're putting back the number of contracts per order ID that's reported by the exchange. It's very important to have that. Most platforms don't report it that way. They just report the chunks that are being traded or being filled. Here we're just looking at the full order, and you can see that there's a meaningful pullback here right to the prior collision right in here. And then the continuation, we have a lower low. This is a classic trade. This is a very classic scalp short trade for me on an order flow basis. And we're seeing here, you're seeing it here again. You can see that there's a big bubble right there. Market consolidated, formed a zipper. There was a collision and it busted through that collision. For now, the market is done to the short side is what that's saying. However, on the bigger picture, so that's today, this morning, and you can see that there's a multi-distribution trend type profile. And what trends do is they fall, consolidate, fall, consolidate, fall, consolidate. That's what we would call a trend. And this is a multi-distribution profile, just means that we've moved down, formed a distribution, formed another distribution, formed another distribution, and we're moving back through those distributions. It's no longer a trend, just a multi-distribution profile. But for now, this is looking like a trend, and we have 3 distributions in the overnight session. So we have an important line in the sand in the 44.75 area. So the initial LIS is right here where this battle occurred between these participants, and that number is 75. So I'm watching the 75 early on. Do they take it back and then hold it for continuation higher into the day session, the day generated prices of the mid and VWAP, which really are sitting right in that area? Do we break through and kind of push back towards where Friday ended up, the Friday upper distribution? Or do we go into 75, kind of poke through to 76, have a hard time, and then go offered, and it starts to sell off? The probability is that we are likely to push right back in here and then continue to consolidate at the bottom end. Here's why. Here's your TPO chart of Friday. You can see the Friday didn't shift the point of control to the upper end of the range. It held the point of control right at 44.80. We're trading at 44.72. We have a low on Friday on the gap of 65. We have a gap zone all the way down to, I'm going to round the numbers, 38. We have this very big untested weak structure beneath us, and we're opening at the excess low from Friday. To me, this stinks of a very strong potential for a retest. So I'm looking for it to try to push up, maybe all the way up to 80 here. Remember, 75 is a key price we're looking for, the LIS this morning, but it could push to 80. If it falls back through and starts moving towards that 65, we're looking for 51, the gap mid, right in here. That's the middle of the gap. And guess what? The 51 was the low of this gap zone. It was the upper end of the gap zone, the low of this gap day, or the day before the gap. And we had a gap from 51 to 45 before. So we had a gap down, traded all the way down to that 70. If you recall, the 43.70 was very important. We poked through the 70 by a couple of ticks or a couple points, and then we rallied the next day, and we had this beautiful kind of impulse up, pull back to prior resistance turned support, and then a push for a higher high on the impulse. So what's happened on the daily is what we see happen intraday all the time. Impulse, pull back, and then take out that impulse high. That's what we did on Friday. And so the question becomes, okay, do we have strength now that we can challenge that 45 high now again? Or is this a strong potential for a pullback? And to me, it looks like a strong potential for a pullback because the structure is weak underneath us. There's just these gaps. We've gapped through a gap. The 51 is very important down below. So I'm looking to see if something sets up in the 70 to 72 range, taking out the 65 and a runner to 51, and then an extended runner to 38 down below to fill in this gap zone here and to bring us back to kind of clean structure. From here, what it might get back to 44.16 if you recall from the last couple of weeks, 44.16 bounce, or does it clean up this structure, turn around, and then come back in here and balance for a bit in the 44.80 area, form a good consolidation pattern for a push through, and now it's got the energy and it's kind of cleaned things up for 4,500. We're anticipating. We don't want to anticipate in trading. Anticipating is very, very costly, but these are just ideas of what could happen, and now the market's got to show us, right? So we want to be the tail on the dog versus the nose, as they say. We want to let the dog kind of make a move, and we just follow it around. Anticipating is being the nose, and the nose gets into shit. And so it's so that's the old floor trader kind of quote there. But you know, so we want to have some sort of a plan, but we want to have a mindset of being flexible about whatever it does, not to be fixed on, hey, I anticipated this, it should do it. It doesn't have to do anything. It might sit sideways for today and do nothing, in fact, and do nothing until Friday because we have this big unemployment report, or do nothing until the FOMC minutes today. We don't know, but we have a plan for, hey, if it breaks 65, let's see what kind of a probe we get. If we get a strong probe and a weak pullback, then we're looking to get short around that 65 area for 51 with a runner to 38. If it's unable to probe the 65 and it goes to 70, 75, 80, and kind of squiggles around and then finally pushes through, we know that it's a gap to settle trade, most likely back to 44.92, and a potential for a retest of 98 and 4,500. What it does, it does. What it does, it does. I cannot overemphasize the importance of coming in with that attitude that whatever it does, it does. The NQ, same kind of story, right? We had this big gap, but the NQ is not as in the same condition as the ES. The NQ built a really nice balance. Then it gapped higher and shifted everything higher so that it's in the 15,360 kind of area. It's building a new balance, and we're just below it. So the NQ is very likely to face resistance on the way up as it retests that balance. Same kind of structure, which is nice to have. It makes the trade a little bit easier to deal with. Today is one of those days where we just sit and wait to see what we get on our platter. We put our plate out, and then Mr. Lunch Lady or Mr. Market can just glop whatever food is on there, and that's what we're going to eat. Sometimes it gives us a nice meal, and sometimes it does not. So, but we need to be ready and anticipate that there will be something on our plate today, and see what happens. What do we do with it once it's on our plate? How do we manage? How do we manage that process? Shitty analogy, but there you have it. Crude, on the other hand, crude is making a serious run. So on Monday, we came in and we really had a bearish engulfing day. We opened above the prior day, above Friday, and then we pushed and then we pushed to below Friday. We had a very clear bearish engulfing day, and then it came in yesterday and it opened at the upper end of the range, built this kind of balance and held the upper end of the range. Remember, crude was trading elsewhere. It was a holiday here in the U.S., but Brent kept trading and so on. And then today we come from that balance and we're moving up. So to me, this is not a rally in crude that we would want to fight. And here we are back at 72, which is the mid of the range and the key test price in this area. We want to see what it does with the 72. If it pokes the 72, hangs in here, and then next morning it comes back through, then it's a retest of the 70. 70 has been tested and retested multiple times. Then it's a retest of the 70, and if the 70 doesn't hold, it's a retest of 67.50 below that. We're in the same range. Crude is just not going anywhere. Look at this thing. It's just a mess. There are reasons for that are beyond my pay grade, but that's how it is. The Russell, relatively weaker than the other indices. Again, a bunch of money was being dumped into the Russell on the break. It did have a very healthy pullback all the way down into its balanced top, and it has rallied back into the upper balance. So we were in the Russell stuck for a long time, for a couple months, broke out, formed a new balance, and fell out of balance to test the lower balance, the bigger balance, and now we're back in the middle. So the Russell is back in its kind of stasis point, equilibrium point right now, and it's the weakest of the bunch this morning. So the Russell overall looking weaker than the other indices overall, because it has not, the other indices have pushed 2023 highs. This has not. And then, it's opening in the same position, but it doesn't have that much to cover, I think, on the downside. It has pretty good structures of support below. It has this excess tail right here. As soon as it gets below this 1890 area or so, it has a bit of an excess that it might kind of run through, but overall, I expect the Russell to be relatively sideways this morning. Okay, that's how things are looking this morning. I'll let you go. Don't forget that we've got this sale going at Convergent Trading. You can check it out by go to ct.pro/summer20. This gives you a quarterly subscription. This is valid. You can sign up all the way through July 31st. The sooner the better. And what you should do once you subscribe to get the most out of your money is to do the Trade Right program. It's included in your subscription. Do the Trade Right program. Follow the exercises that we have, the coin toss and other exercises. Become a master of those, and then show up to group mentoring for us to help you address your issues. Okay? Good luck, and I'll catch you soon. Take care.